In this week's episode of the Stockscores Market Minutes, I'm going to talk about a simple concept that will help you to beat the market, to create fast wealth in the stock market. And then I will do my regular weekly market analysis. We're going to look at the day trade of the week on CVV and run a market scan that will help you see where those opportunities lie going forward. All right, so how do you create fast wealth in the stock market? The concept is pretty simple. Applying it, that's the challenge. But the thing that you want to do is focus on the hot sectors of the market. Now, conventional wisdom says diversify, own stocks in different sectors, that sort of thing. I'm not a big believer in that. If you want to beat the market, you have to go to where the action is. And if you can find that sector of the market that is leading the way, that is hot for whatever reason, and then do a top-down approach. So you find the hot sector, and then you look for good stocks in that sector, you can really have accelerated returns. Now, what I like to do is look for those groups of stocks, themes that are showing strength. So when I'm trading through the week, let's say I notice that oil stocks are really doing well that week. Well, I'll go take a look at an oil and gas ETF and see if that chart for the ETF is breaking abnormally from a predictive pattern. You can also do a top-down approach where perhaps on a weekly basis, you look for an ETF showing strength. So sector ETFs, there's hundreds of them. If you can see one that is showing abnormal strength, check their 3-year weekly chart to see if they're breaking from a predictive pattern. Then you can maybe find that next hot sector. Now, some patience is required because the hot sectors don't start up on a weekly basis. You're going to be constantly doing this process each week to find them. But it's very rewarding because every year there are a number of hot sectors and you just have to time the entry when they first start to show abnormal activity, abnormal price gains from a predictive pattern. I'm going to show you a couple of examples from the past so that you know what to look for. And then at the end of the video, we'll do a market scan where I'll show you how you can use Stockscores to try and find those sorts of things. Now, if this is something you'd like me to do in the future, in this video perhaps, just click on the like button or leave a comment, and maybe it's a feature that we'll add, the next hot sector, a search for those. All right, let's take a look at some examples. And this is the cannabis ETF, or one of them. And what I want everyone to notice is back here, when there was that abnormal price gain with abnormal volume, and it was breaking a downward trend line from a rising bottom. That's what we call a bottom fishing pattern. And this is a weekly chart. In, say, November of 2020, we had that break to $14. Within 3 or 4 months, it had hit as high as 34, and really a double pretty easily in just a few months. Let's look at another one. This is a hot sector from 2021. You can see again the abnormal price action on the weekly chart. This is the dry bulk shipping ETF. Abnormal volume, see, quiet, then it comes alive, breaking a downward trend line from a rising bottom. That's just one example of a predictive pattern. But again, look at the astronomical gains in that sector. You don't necessarily have to buy the ETF. You could buy stocks in that sector. A little bit of a Google search will help you find those. But that's the case there where that dry bulk shipping ETF has gone up triple. It's gone from $10 to $30 in 4 or 5 months. And finding those hot sectors using this top-down approach is going to be a good way to find the next hot sector. And again, if that's something you'd like me to add to the weekly Market Minutes video, leave a comment, leave a like, and we will see if we can add that. All right, U.S. markets, the S&P 500. This is the 30-day, 60-minute chart. You can see it's in an upward trend. Buyers in control. Pretty quiet. Volume is very light. Typical summer volume is quite light, but it remains a bullish chart. Long-term trend is also up, so bullish long-term. NASDAQ, a little bit of a pause the last month and a half or so, but still in an upward trend. This is the daily chart, and so it remains a hold or optimistic chart. The IWM, which I use for my day trading and swing trading as a proxy for that, It is a 30-day, 30-minute chart here, and you can see that it has been trading sideways for a few weeks, but it's building something called an ascending triangle pattern. And if it can break out from that pattern through resistance at about 224, then we should get some life back into the more speculative stocks, the sectors of the market that tend to do well because retail traders are pushing them higher. Onto the Canadian markets, and there again, the TSX 60 on an intraday basis is trending higher, and so it remains an optimistic chart. The long-term chart for the TSX is also in an upward trend, and it's a linear upward trend. It is not parabolic, and until we see a break of the upward trend, we have to remain bullish. On the TSX Venture, which is those micro-cap stocks in Canada, it went parabolic early this year. It broke down, and ever since then, it's been sort of sideways with even a little bit of a negative bias. And so I think that the TSX Venture market is one best avoided unless you see an individual stock that really has a good pattern, but the overall market is not helping there. On to currencies, and here you have the US dollar is slowly building a basing pattern. It needs to break out through that resistance level, but you can see it's built a rising bottom. That's a sign of optimism, and then we just need to break out through that, and I think the US dollar will start to move higher. Bitcoin has had strength the last 3 weeks. It's now coming down to its downward trend line. I didn't draw that great, it's something like that. So it's basically at the downward trend line. It was oversold, it's come back. Now the proof is in the pudding. Will it be able to break that downward trend line, or is it going to instead roll over and move lower again? Based on probability, it's probably more likely to move lower from here, but it's hard to say with certainty that that's going to happen. I think you be relatively cautious with Bitcoin right now. And Ethereum, which is another one of the cryptocurrencies, that's hanging in there pretty well. It's coming into resistance. I think the opportunity is not great in Ethereum, but if you're in it, I don't see a reason to sell it. I just don't think I'd be a buyer here. On to commodities, and you can see gold, which had a bad week 2 weeks ago, breaking this little upward trend line. This week it bounced back a little bit. It's still in, I would say, a pessimistic, slowly drifting lower pattern. So I'm not too enthusiastic about precious metals right now. And the oil chart is stalling at some resistance. You can see the old trading range from over here is now proving to be some resistance for the oil market. Not really breaking down. The upward trend line is still intact, but the shorter term upward trend line has been broken. I think oil's probably going to go sideways for a little bit, and that means individual oil stocks, if they have a good chart, could be considered, but it's not a hot sector anymore. It was a hot sector starting in November of last year, and it had a great move. I think now you're getting a little bit into the mature part of the trend where it may get stuck. Fear chart is very low, so investors fairly complacent, not looking toward a major correction, at least insofar as the VXX would predict one. So my ratings then, bullish on both time frames for US and Canadian stocks. Gold, neutral long-term, bearish short-term. Same for oil. While trading activity is generally slow, it is a summer market, every day there are hot stocks that make these large moves. However, these moves are typically short-term. These stocks go up and then they come right back down again. And that means you have to be a very nimble trader to make money in this market right now. The longer-term trading is pretty quiet, typical for summer markets. That should end in the next few weeks. And then we'll probably get a little more action. Gold and oil showing some negativity, not terrible, but I would be a little bit cautious with those, especially if the US dollar can break higher, because that makes gold and oil more expensive and can often lead to some downward price action in those commodities. All right, let's take a look now at the day trade of the week, an example of a stock that was picked up by my algorithms in our Stockscores Active Live service. And this one triggered right at the open on Friday, showing what we call an action candle. It gapped up. It was not a very liquid stock, so I actually wait for what I call a second signal on stuff like this, but there you can see my little action candle indicator, the little pink dot that fires. It searches for statistically significant abnormal price and volume as a clue that something is going on. And then this stock had actually a nice move right here, went up to 6 times its risk before breaking the upward trend line. In this market, because it is very volatile and trends seem to fizzle out, I would take my profit as soon as that little upward trend line was broken at about a +4 RR. So if we look at the economics of this trade, for every $100 of risk, required 620 shares, $2,827 in capital. Using margin, that's only $942 of capital to make about a $400 gain. That's a 42% return for the day. Just showing you the power of these hot stocks that can make big moves. Just realize that in this market, they can go up and then they can come right back down again. And so you have to be pretty nimble and not too patient with them. All right, let's jump over to the Stockscores website now and run a little market scan that you can do if you are a Stockscores member to try to find some of those hot ETFs. So what you can select here is the Stockscores Simple ETF, US or Canada. We'll run it on the US. And what it does is it goes through a sector of exchange traded funds and looks for those that have had gains in the last 10 days as a basic clue that there's some action there. What we then must do is look at the 3-year weekly charts of these things to see if they are surprising the market with strength. Now, many of these will already be well into their upward trends. We want sectors that are just breaking from a predictive pattern. Now, we have 81 stocks to look through here, or pardon me, ETFs to look through, and we won't go through all of them, but this is the process that you can run every week, looking for those predictive patterns. So for example, here on the corn ETF, it broke a downward trend line here. It started showing some abnormal action, breaking through some resistance. That's the kind of thing we want to watch for. Now, this week it's showing some strength as well, but not really from a predictive pattern. I think it's a good hold to be in corn-related stocks, if there is such a thing. And many of these would be commodity-based. Some of these will be stock sector-based. So you'll see something like the biotech sector. Here's the Italian market sector. It's breaking a little pullback this week. Looks like the Italian market is more likely to go higher than lower. And if you see a theme that looks good, here global robotics and artificial intelligence trying to break out from a pennant pattern. Hasn't quite done so yet, but let's say it had. We could then do a Google search for robotics and artificial intelligence stocks, and I'm sure you'll find a list of some stocks in that group. Or you could even look at the makeup of the ETF, doing a search for this name of the ETF and look for component stocks in it and try to find the stocks that are leading the way in that group. And that's just a very straightforward top-down approach to finding opportunity, but focusing on what may be the hot market. And that's the key to really beating the market, is to find those sectors that are hot and then ride the wave with the individual stocks. All right, well, that has been my Stockscores Market Minutes for August 16th. Hope you've enjoyed it. If so, click on the like button, subscribe to the channel. Most importantly, next week, trade well.